Hi traders, this is Dr. Barry Burns with TopDogTrading.com. Today we continue our series on cycles. This is the second video in our series on cycles. If you're not watching this video on my blog, you can go to my blog at TopDogTrading.com and see the entire video series there on cycles. So the second video here today is going to be about seasonal and calendar cycles. These are cycles that tend to occur around the same time every year. Some of these cycles are agricultural cycles, planting in the spring, growing through the summer, harvesting in the fall. So commodities have been well known for following the cycle. It's a very important cycle, obviously, for commodities. And of course, that will vary depending on where the commodity is grown around the world. Retail, Christmas, of course, is usually a highlight, or it's at least hoped that it will be a highlight of the retail year. Stocks that have to do with the travel industry. Of course, the summertime every year is the time when people are looking for those stocks to make the most money, for those companies to be bringing in the most revenues. Companies that have to do with taxes, tax preparation, and so forth. Obviously around April 15th, and before that is the time when those companies are looking to make the most of their revenues. So it's not as simple as saying, well, during these times every year, these stocks go up. It'd be nice if it was that easy, but it's not. So, but these are definitely still cycles, because these are times when everybody's looking at these particular markets and asking themselves, well, are we having a good crop this year? Or is this retail company having a great retail year? What's Christmas going to be really looking like? What's the summer vacation scenario appear to be this year? And so it can be good news or bad news, but people are watching, and they are cycles. Another very common cycle is the what's often called the Halloween cycle, and that's where you buy right around Halloween time and then in May go away. I watch that cycle. I don't live and die by it personally. I've watched it for many years. It's a very, very well-known cycle, but not something that I really trade, but I do watch it. And so here, here's where we are right now. This is a weekly chart of the spiders, the S&P exchange traded fund. So for example, if you were to follow this, well, let's go back here to last year. Actually, we're going to go all the way back here to 2007. And I'll pull my chart back a little bit for that, because we had a nice big uptrend here. Okay. So this was looking great. So here, for example, in May go away, here's May. That's May 11th, 2007. The day comes first, 11. Then the month is the middle number, and then the year is at the end. So you'd be buying right around here. So as you buy, market goes up a little bit, then it comes careening down. And then, actually, let's see. Yeah, here we go. This is when you're out. I'm sorry, this is when you're out. So in May, you're out. Market goes up, comes careening down, goes back up. Okay, and then here we go. Here's where we get in, right around Halloween time, late October, early November. So now we're buying. And that worked out less than stellar. So 2007 was not a good plan. Did not work out too good. Only good news was you did get a little bit of a move up. And this black line here is the 50 simple moving average, by the way. So you got a little move up into May when you go away. So it helped to get back some of your losses. So now you're out of the market if you follow this approach, and that was a good thing, because the market really does dramatically go down for the next 6 months. And then we come back into the buying time, and that's right here. So now we'd be buying around October 31st, 2008, and the market continues to crank down. Now it has bounced back up, and of course now we're in May. So May go away. This is when we would have already been out of the market right at the beginning of May, right around here. So this last couple of years, this strategy has not really worked too well. Now some years it's worked better than others, but here as of recent, not too stellar. So let me show you another calendar cycle that I kind of like. Again, this is one I always watch. I'm not recommending any trades or any strategies or calendar cycles that you trade here. Just pointing some things out. We're just eyeballing it on a chart at this point. Go look at it yourself. Make your own personal decisions. I'm not making any recommendations, just to be clear. But what I have noticed is that around March, there's always some, not always, there's often, I should say, some kind of cycle happening. Now, it's not always a time to buy or always a time to sell. Sometimes it is buy, sometimes it's sell. And sometimes it's not a good time to do either one. But I've noticed that very, very often every year, some sort of cycle is put in the month of March or thereabouts. A week before, a week after. So, give it about a 6-week window there. And we use indicators to actually find the exact cycle highs and lows. So here, where did March go? March is right here. So here is a cycle low in March, and that would be a good time to buy. The market went up during that time. Okay, that's 1999. 2000, again, a nice low here in March. Boom. 2001, again, there's March, end of March, another nice low. Boom. Okay, again, I'm not saying these are the best times, to get in or get out, but I'm always watching March. Again, March, this actually would have been a great time to sell, to short. Boom. Okay, that was that. Oh, here we are, 2003. There's March 14th. Again, that would have been an incredible time to buy. Boom. Alrighty, 2004. There's that high. Boom, comes down. Nice ABCDE retrace. Right there. Okay, 2005, again, a high in March, significant high. Good time to get out if you're long, cover your position, come back in later. 2006. Now, 2006 did not really work that well. This was one year when the March cycle did not really prove to be significant. Didn't come until May. Came in May, not in March. And that's good to note that these things are not 100%. But then the very next year, 2007, March put in a nice low again. Very nice low, in fact. And as we get into 2008, again, a nice low there in March 21st. And in 2009, bam, nailed the low. And because I was watching this March cycle, I bought that low and still have a position on. And so, again, some years works better than others. Some years it's more significant cycle high or low than others. Sometimes it's a cycle high, sometimes it's a cycle low. We saw the one year where really there was nothing there. It didn't come till May. Something to watch, something to put on your radar screen. And all these different calendar cycles that I mentioned, take a look at them. Know what, if you're trading stocks or commodities or whatever, know what kind of calendar cycles are associated with those particular markets and watch for them.